Hello financial hub traders, welcome again to our channel here and another episode of our market breakdown. So this week I don't have much to say when it comes to fundamentals. It's a slow week of fundamentals, nothing much unless maybe we have breaking news or so, but we don't have that much apart from the governors of banks speaking. We can see the BOE, Bank of Japan, RBA, all of them are speaking this week. So that's really the major news that we're following, together with the API and EIA, which I'll get to talk to later on. So with that said, and before we get down into technicals, I'd like to speak a bit about psychology. And psychology is really major when it comes to the market. So when you have a fundamental perspective, which is good, and you have a technical perspective in the market, which is also good, you need to understand that you need to have a psychological understanding of how the markets work. So with that said, it needs time and a lot of work put into it. Psychology is one of the hardest things to ever understand, and how to go ahead with it and how to use it in the market, because you have to understand your own psychology together with the psychology of the masses, and how you can go against the mass and stick to your own understanding and perspective of the market, which is the 1% of the traders who are always profiting in the market and staying on that side, which is really tough and hard to get to that level, which is basically like a mastery level or so, that will really make you become profitable in the market. So right here I have a book which I journal my trades. Together with journaling my trades, I also write. It's not really my journaling for trades, it's more of I write down my understanding of where I see the market going this week. So different pairs I analyze Sunday night, and I see where the market is going. So I write everything down here. So if you can see, I know it will be a bit blurry, but with the light and all, but you can see. I know it's blurry and all, so don't mind. So that's basically it. So every single week, every beginning of the week, I write fundamentally what I'm seeing in the market's going to happen. So I write fundamentals of the week, and then in line with that, I analyze the market. So let's say I'm looking at gold, I write it down. And now during the week, I do the psychological part. So I do a follow-up or a recap. So I can do, like on this page, I know it's not that clear, but I've written gold, my analysis for the week, and on this page I write a follow-up or recap. So on this page I write down how I am psychologically, where I see the market going, how I'm behaving in the market, if I've taken a trade, how I'm behaving, how my psychology is, am I being taken by emotions, or am I sticking to my trade setup and my analysis and all. So that is really key, to be able to follow up on that and see how you're performing in the market, and coming back later on and reading and understanding and correcting what you are doing wrong is really key in the market. So this is something I just advise people to do. It looks really simple and really easy, but these simple things, this 1% stuff that you do, is what really makes that big difference in the long run. So it might seem really small. Why do you have to write everything down? I used to be stubborn long time. I used to be like that, but slowly you come to understand, okay, this is necessary. How am I performing in the market? What am I doing? What do I need to write down? How was I behaving 2 weeks ago, and how have I progressed right now? And am I any different, or am I still repeating the same mistakes? Because we know in the markets, we never make new mistakes. All the time we keep repeating the same old mistakes. We don't journal, we don't write down our goals. Those simple basic stuffs that people don't do is what can really make you leap into the profitable and the 1% of traders, which now we are really pushing towards, to be consistent in that side. So this is something I'd really advise most of you to write down. Just write down your weekly goals, write down where you see the market going, and during the week do a follow-up and just write down how you're performing in the market, what you're doing, and just being able to do that on a daily, getting that habit into it becomes a routine slowly, is really important in the market. So for example, like what I want to talk about today, like you see here is gold. I know it's not clear, so don't really worry. So I've written gold, and I've written over here high probability. So I'm really watching gold. So when it comes to the market this week, I'm not confusing myself and going, okay, I need a trade, I am not in any trade. How is Euro USD looking? How is oil? How's GA? And looking, I'm not confusing myself with all that. I prepared myself on Sunday, and I know what I'm looking at this week. So I have a watch list, and my high priority and high probability trades are now gearing up for me to take those trades. So that's the main thing. So when it comes to trading, there's a lot it entails: risk management, trading, having a trading plan, trade journal, technical analysis, fundamental analysis, psychology. It's a whole business that needs to be entailed together and intertwined. It's really massive, and it takes time and effort. That's why you can't become a really profitable trader within 1 or 2 months since you introduced into the market. It takes time to build that, and most of this needs a lot of unlearning. So that's something we learned in the market. In order to learn, you need to unlearn what you've been taught. The school system has messed up with our mind. We've been brainwashed. You need to be, the school system, for example, has taught you always need to be correct. If you're not correct, you're either punished or you get it wrong. When it comes to this market, Forex market, you have to be honest with yourself. Understand that you will fail and be wrong a lot of times, and that failure is something good. So if you take that failure as a setback or something that won't propel you to the next level, and you stay stagnant in that level, my friend, you're going to drown. Because just like you're swimming in a swimming pool, if you're swimming and you get to a point and you stay stagnant, what happens? You see, you start drowning. But you need to always move. Even if you're lost, you always need to be moving and understanding the game and all that. So that's basically just something I felt like I need to share today. I hope it's really helped. But apart from that, today I'll look at two pairs, or rather I'll look at the commodities. I've not done US oil in a really long...
Hey!
I've not done US oil in a really long time, so I'd like to look at US oil so that I can cover up what has been happening with the gap we saw last week, what is happening right now, and where we see the market going. And after that, I'll do gold. I'll actually start with gold, then go into oil and do sort of an in-depth analysis on these two. Then maybe next week or the week after, we'll go back to the currencies, because also not that much has been happening. Just following up what we did last week. I don't want to do another follow-up again, because markets are still playing within those levels, because we can see Aussie dollar headed down to our targets 0.6800. We hit that level, went below. Now we're nearing 0.6750 level. Apart from that, USD card 1.3300 level, hit to the T 4 times. So keep looking at that pair. We might have that push to the downside really soon. Euro USD still in that ranging market, so keep looking at that as well. And also there's a lot of which in the following weeks I'll do a follow-up, or rather I'll do an analysis on Euro, Aussie and GA. A lot of potential moves in that. But as long as you know WhatsApp group, you've been updated on those pairs, what is happening, and basically that's it. When it comes to GJ, GU, the team has been covering all that. So without further ado, let's just jump straight into the markets and see what is happening over there. So yeah guys, this is gold, the monthly chart. So why I've opened this is because we always need to keep in perspective what is happening in the monthly chart. This month ends next week on Monday, on the 30th. So the candlesticks are about to close, still respecting this channel that we covered. Don't get really deep into that, because we covered that about 2 weeks ago. And looking at the formation, which is really key, we can see now we are forming sort of indecisive candlestick formation. So depending on how this candlestick closes, I don't want to make any any pre-assumed how the candlestick is going to close. We'll wait for that to close next week so that we can really understand. So keep an eye on this. But if we go down to a weekly chart, we can see we covered this last week but one. The candlestick, the trend pattern is still critically being broken really soon. So as you can see, I actually adjusted this. If you look at the analysis we sort of had like this. So it had sort of been broken, but adjusting it just so that the trend line can touch the wicks, we have sort of that. So we're still respecting this trend line. at the moment. Let me just expand that for clarity. So we can see that's what's happening, but at the same time we also have this resistance level which has been tapped. Market is closing below, which is 1525, major level. So looking at that on the weekly chart, it's showing us a lot of indication. But if we go down to the daily chart, now we get that full picture of what is really happening, and there are a lot of analogies to this. So I'd like you to pay keen attention on this, because it will really influence where the market is going to head in the next few days. So I remember last week I covered that. Let me just get rid of this. I'll get them back soon. So I covered last week that we're having sort of a head and shoulder formation with a double top at the head. So that is very key. It's a pattern I've been following for some time, and it always happens at that top, the double top formation. So we have that. Like I covered last week, we might have another push and touch 1525, which the market respected, and we've seen the market now is ranging around that level. So keeping in mind that the market now is at a critical level. So if you look at that now, if I bring back the trend lines I've drawn, just give me a sec. Just a sec. There we go. So if you look at this, we had this. This is more, I'd shown this on the 4 hours. So basically we've been within this channel. So up, down. So high, low, high. Now we are forming that higher low, which is very key. When we're trending, it's better to be in the side of the trend rather than looking for predicting that the market is going to change. We're going down, market is changing. With the way we've watched the markets for some time, it's really key to stay in the side of the market and look at the trend. Don't go against the trend until the trend breaks. So until we break below this, like I covered last week, until we break below 1485, that's when now we are breaking below the previous higher low, and which is really key. So we might be going to form new lower lows, lower highs, lower lows. So looking at this, we're having that trend. So if we keep in mind, this can be a 1, 2, 3, third bounce of the trend line, and the market to shoot further up, targeting around 1540, 1560, around that level. Maybe another retest of this, having a double top, or even go to form new higher highs of the year. So keep that in mind. That can be one analogy. The another analogy we can have is, if you look at this closely, this where I drew my trend line from, it's not really from a really significant lower high. So if we take this position, which is much better, as you can see, basically the previous in the bigger picture, the previous lower high, higher low, the previous higher low, I mean. So if we take that and we bring it to touch the second part, that, as we can see, that trend line, what we have now is a retest. So basically market went up, breakout, retest, and now market can really drop from this level. So just looking at different perspectives, just different pictures, and having that in mind, keeping it clear all the time, so we can have that major drop immediately after this formation. So I'm keeping a keen eye on this 1525, really critical level. So between 1525 and 1535, that we can maybe have spikes above there. But looking at this market closely, a lot of momentum might come, especially market has been ranging for some time. We can see this previous level around here, and we covered it some time back. This region, market has been consolidating for about 7 days consecutively. So we might have that major drop coming really soon. So that's basically what I wanted to show on this, the different perspectives. So if we go down even to the 4-hour chart, we can see this now. This, what I've drawn here, is just in-depth Elliott wave analysis. So looking at that A, B, C level, X, we might have that A, we might come and have another, we might have this movement to touch the trend line yet again, and market can push further up. And even if you look at the 2-hour chart, you see this can come and retest this broken trend line. So we had this triangle, and where I drawn this target level is, I don't know if I covered this last week or it was part of my journaling, that this was the ultimate potential target we're waiting for, 1525, 1527. Once this once this triangle was broken, and we can see we're now at that level. So we can come again down, retest this, and come back up, maybe even shoot higher before we have that significant drop. So always having these perspectives in the markets and always being ready for what might happen is really key. So that's basically what I have on gold and what I'm really watching. 1540 is a level also to watch, so we're keeping in mind all that. But at the moment we might have that pullback, maybe that shoot back up after retesting this broken trend line, and then have that drop really soon. But if that's not possible and we respect the bigger time frame, the head and shoulder formation together with the retest, we might have that drop really soon. So that's basically what I have on gold. Beautiful analysis, just doing technical analysis, which we've been practicing for the past couple of years. So basically that's it. And let's look at oil. There's a major move coming in oil really soon. So yeah guys, this is oil is red hot, man. Needs some cooling down. What this pair did to some people a few weeks ago, only God knows. Anyway, this is a beautiful chart pattern, pattern. I'm watching a descending triangle, respecting all the key levels. We're looking at that really clearly. So this is an analysis I've been having for the past, I think, for the past 4-5 months, this triangle. So you can see I did it earlier on this year. So when the new year started, I did an in-depth look at this, and this a pattern I was looking at and I was seeing. So if you look really closely, what can happen, and you can see here I've written watch the momentum. So what I mean is, if you look at this first time, so just look back at history, look at what happened, and look into the future and into the present, and see what is likely to happen right now and into the future. So we had this impulse, we had that pullback, entered into a sort of consolidation triangle formation. So we had a really strong pullback that came really fast, then we consolidated. So the momentum started losing momentum to the upside, and those potential that this pair was going to drop really soon, which actually happened. So watching the momentum, how it came and slowed down. When I say watch momentum, what I really mean is at this level, you see where I've written B, we had this sort of 3-pin pattern at the top, and market started dropping. That was a potential drop that market can come and drop straight down. But what happened is the market came straight down, then we had that sort of consolidation, sort of a short pullback before the market actually dropped. So watching that momentum, market didn't just drop once, it showed signs of dropping, had a pullback, then had that major drop. That's what I have also over here, because I'm still looking at the market. I'm really majorly on the monthly long term, I'm really short. So looking at this, we had that sort of strong impulse to the downside, then market started pulling back yet again, and now we're sort of consolidating there. We're not really having a move either up or down, we're just respecting a certain range in the market. So that is a momentum I'm really watching. So looking what will happen in the markets, maybe we might have, just like here, the market can come and enter this downward range yet again, and maybe test 78.6 if I enlarge on that. So maybe market might come. Remember, in the markets, it's all about having different perspectives in the markets. Not all perspectives are right. You can be right and wrong, but being prepared in advance is really key. So we might have that move, maybe touch that level yet again, maybe even just touch 61.8, but mainly maybe spike into this level before we have that major drop in the markets this down. But keeping in mind, if we break above this level, what's happening if we break above this level, this key level, and we start approaching levels of 70, 75, 78 and above, market might be in a really push to the upside. We might be entering bullish territory, but at the moment we're looking at the long-term time frame, we're still majorly short. So if we go down to the weekly chart, so keeping that in mind, if we go down to the weekly chart, as you can see up here, just as a reminder to myself, I wrote keep watching the monthly chart to get the big picture, just not to forget and get intertwined in what is happening, what we call recency bias. So you neglect what has been happening and you start seeing, okay, there's a new trend forming, what is happening? So just avoiding that confusion, I write that just to remind myself, or keep that over there. So as you can see, monthly weekly chart, we've been in this beautiful pattern. You can see what has been happening long term on that market. broke out of this channel. As you can see, we had a retest of that broken trend line, came and respected Fibonacci level 61.8, and now market is sort of trying to push to the upside, but not really getting that potential push, that bullish momentum to the upside just yet. So we've spiked up above this. We have not really broken and closed above it, but we've spiked up above this trend line channel. As you can see, I don't know what to call it. It's just a different analogy. I don't show it that much, but because of this analysis, I really want you guys to see and understand what is happening in the markets. So we spiked up above, and markets is really sort of not getting that much direction. So what I've written over here is that we can have a potential retest, double retest of the market. So if the market is able to shoot up above, we might have this formation. Maybe we might come and retest there yet again before the market actually drops back down. So that's just one analogy, and if we're able to get that retest at it will be in line with the Fibonacci levels 127.2 Fibonacci extension level, which is in line we've seen on the monthly chart, this 78.6 level. Around this level, around that, it's the $70 mark. So around that level we might have that retest. So as I can see here, $70 mark, really key potential level we can have on the market. So that's what I'm looking at. We also have potential for the market to drop, but at the moment, with a lot of uncertainty, we're keeping an eye. Tomorrow we'll have later on today we might have API, and later on tomorrow we'll have EIA, which is basically the inventory of the stock inventory of oil back in US. And we really look at this, which is really major because it's the WTI, West Texas Intermediary Oil, something of the sort, which is basically like the benchmark of oil and the prices of global oil, which is really important to look at. So tomorrow we'll have that for the week ended 20th, which was last week. So it's always a week behind. So we'll get to see how much demand was in oil, in the side of oil from the US in terms of the whole world, because we can see there was a shortage of oil supply from Saudi Arabia. So I'm pretty much sure there's a lot of demand of oil from the US side. That's why we had that big gap and a lot of the price surged much higher. So basically it's like supply and demand. We're taught this in business. So when there's a lot of supply, the demand is also reduces because it's a lot, it's saturating the market. But when there's little supply, which we saw, the prices of commodities really shoot. So we're really looking forward to that. Today I'll look at API, which is not really that important, but it will give me sort of a focus of what might come out tomorrow. Then tomorrow when we have the EIA, which many people follow and respect other than the API, is what now might see some pushing in the markets. Not really sure, we'll just see what the market will tell us, but that's a data that I'm looking forward to seeing. So that's basically it, guys. That's what I have for this week. I don't have much to say. Next week we'll go back to currencies and look at what has been happening. Also still cover gold. Maybe if oil has moved, we'll also do a recap on that, but basically that's it. So until next week, you guys stay fresh, stay clean, stay wahana, as we've always said here at Financial Hub. And I'm sure I'll catch you guys next week. Don't forget to do this. Really major. I cannot stress this much more. I know it's lazy. You'll start doing it after 1, 2, 3, 4 days. You'll say, oh, okay, this is not really necessary. I'm actually making profits in the market. I don't need to write anything down. But later on, you'll be hit like it's crazy. It's like a tsunami just hit you, wiped your trades out, and you're like, what happened? So follow on to do that follow-up. Try and do it. It's not that complicated. It's simple. Even if you're not a full-time trader, just get time at night or early in the morning, change your routine and just try and make that happen. So basically, without further ado, guys, that's it from me, guys, and I'll see you guys next week. Stay fresh.
You can't wait on other people to be what you've been called to be. You can't wait on their affirmation. You can't wait on their approval. You can't wait on their support. Sometimes you just got to run and look behind you and say, everybody who wants to run, but I can't stop running because you're not running with me. Listen to me, hear me. You can't stop chasing your dream just because somebody in your life won't chase it with you. You can't stop believing in yourself just because somebody in your life won't believe in you. You can't stop chasing the dreams of your life just because when you do it, you're going to have to do it all by yourself.